Welcome to this short video looking at investment strategies in more detail and checklists for success. So what we're going to really cover is what is the mental questions that you should ask yourself before each trade that you go ahead and place. And we're going to cover maybe about 8 or 9 different main elements to look at before you actually press that buy or sell button. So the very first question you have to ask yourself is, why are you doing this trade? Okay, you want to build up a series of pros and cons to why you're looking to take out this position, and then you're going to revisit this section a little bit further on down the line once you cover some of the other areas of due diligence. So why are you doing this trade? You're going to revisit this bit at the very end, and then you're going to have a really good look at that, and that is going to help you decide whether or not this trade is good for you right now. So the very next thing that we actually have to look at is understanding the actual fundamentals behind the trade that is you're doing. You know, what fundamentals are currently affecting this product? So we're looking at things, if you're trading a stock, for example, is there any final dividend dates out? Is there any final results out? Are there any trading updates? Is there anything else that can come out that can really affect the stock? So check to see what fundamentals and news flow are affecting the stock right now, and what impact you think that might actually have on your position. One area as well you want to be aware of is what global economic data results are due out. Is there anything to do about non-farm payrolls? Is there any inflation data that's due out? Is there anything to do about trade balances or anything like that? These can all have quite a big impact on your positions as well. Even if you're trading stocks, if you're trading foreign exchange or indices, these data releases have a big impact and they're released every single day. So please do be aware of that. So always check the fundamentals. So that's kind of covering the fundamentals right now. But for you guys at home, one of the things that you really want to get to grips with as well is what future fundamentals are also due out. For a lot of stocks and shares out there, there's plenty of warning when a set of results are due out or when they're expecting to come out with a trading update. So please do be aware that these elements might come into play. Also, global economic data, we talked about that just a second ago. They are new data releases out every single day. So don't just think you've just got to have today to worry about. You've got tomorrow and the following day and the following day. One of the worst things that you can do is go ahead and do quite a big position and then not realize that non-farm payrolls are due out on Friday. Okay, so bear in mind you do have the future fundamentals to be aware of, and mark those down and think about how you react if those economic data results are not what you would expect. The next thing we want to go ahead and look at is more efficient entry points, okay? Now, efficient entry points are very important because you want to be looking at major support and resistance levels, because whenever you enter a position, you also want to be able to set yourself a stop loss and a take profit order. And the closer you can get into an important support resistance level, that allows you to trade with much tighter stop loss levels, and that helps you with what's called your risk reward ratios. If you only are risking a very small amount of money, then you can look to try and make that a little bit more. So always think about having efficient entry points and make sure you try and place them next to important support and resistance levels. One of the things we also need to have a look at is risk-reward ratios. Typically, if you're willing to risk this little bit of cash, you're looking to make that little bit more profit. Now, typically, many investors out there like to utilize what's called a 3-to-1 risk-reward ratio. For example, if you're going to risk £1,000 in a position, that means potentially you want to set a profit target at £3,000 higher. So you're risking 1,000 to make 3,000. So you always want to think about your exit strategies if your position goes against you, and your exit strategies if your positions go into your favor. Don't automatically assume that you're always going to make money in every single position. It's very, very beneficial to have those exit strategies in place. So that gives you a bit of a flavor of what to go ahead and expect. One thing that you really want to get to grips with is technical indicators as well. Okay, we've talked about support and resistance and trends and patterns, but technical indicators, incredibly important for investors out there. You guys at home should be very well aware of what a moving average is. I want you guys to look at 21 and the 55-day moving average. I want you to look at the MACD, the RSI, and the slow stochastics, and if you're ready for it as well, overlay a Fibonacci retracement over your position, and this will actually help you build up a lot of evidence to back up your view. What you're looking for is for there to be a bias towards your way of thinking. If you've got a lot of conflicting indicators there, you might still consider to do the trade, but you might trade a slightly smaller size. So remember, you're building up evidence of your view. Does it all back up your view, and will it help you be more successful? Okay, so if you're not quite so sure about some of the technical indicators, do make sure you look at the technical piece in the education section. The next area that we're going to cover is historical evidence. Is there statistical evidence to back up your view? So if we take the view of maybe you're trading a particular product that has a double top or maybe a head and shoulders formation, which is quite a classic technical analysis pattern, what other evidence is there of previous patterns having been successful? So if you've got yourself that nice big resistance level that you want to be able to take advantage of, how many other times has that resistance level remained intact? So what you're looking for, statistical historical evidence to back up your view. How many times has it conformed to that same pattern, and does that conform to the bias of your trade as well? So very important. Historical data is certainly the way to go. If we have a look at correlations next, and this is quite important. Let's just say that you guys are trading on a mining stock, for example, okay, and you decide you want to take out a position. What you also want to have a look at is the exchange that stock is trading on. Say, for example, if you're trading a UK mining stock, you might want to have a look at the UK 100 index. Is that also trending in the same direction as you expect your trade to go? Next thing, what about commodities? Obviously, if you're trading a mining stock, what about commodity prices? Are the commodities that mining stock is involved in, are they also trending in the same direction? You certainly don't want to be trading a mining company when you might expect there to be a massive crash in the commodity markets. So do think about that correlation a little bit more. And one thing to think about as well is negative correlations. For example, if you're trading an airline stock, remember that an airline stock has got a negative correlation in regards to the price of crude oil. Obviously, planes need oil to fly. If oil prices are skyrocketing, that affects an airline's bottom line. Obviously, if crude oil prices are dropping down, that makes it a lot cheaper for airlines to fly. So always think about correlations and try and think about the bigger picture as well. The next area to look at is in regards to kind of downside risk. What percentage of your capital are you risking on this position, and can you justify this? Okay, so if you've only got, like, say, if you've got £1,000 in your account and you're risking £800 in one position, some people might say that that's a slight overuse of capital on there. You're risking too much and you're not opening yourself up to be able to get advantage of any future trading opportunities. So don't invest all your money right away, and certainly don't go ahead and risk all your money in one massive position. It's massively important that you guys get to grips with that. One thing as well, try not to trade multiple positions that are all positively correlated. For example, don't go trading 5 mining stocks or 5 gold stocks, because if there's a drop in one of them, it impacts all of them. So do always think a little bit about that diversification as well. Make sure you trade products that are not positively correlated together, and that can help minimize your downside risk. The next area to look at is in regards to overfinancing. What is the margin required for your particular position, and what percentage of this does this represent to your total capital? Because one of the things you don't want to go ahead and do is over-finance yourself, because if there is maybe an unexpected market movement against you, it might have quite big ramifications for your trading account. Just remember, when you are using financing, it is an incredibly useful tool, and it does help you take advantage of trading opportunities out there and give you the best use of your capital. But just remember that it magnifies your profits, but it also magnifies your losses. So make sure that you're always getting to grips with that as well. Always make sure you've got enough equity left over to be able to take advantage of other future trading opportunities as well. Okay, one of the last things you want to think about now are you confident about your trade? And we mentioned before, why are you doing this trade? You want to get your advantages and your disadvantages marked down. If you follow this kind of set of criteria of questions that we've kind of covered in this actual sort of session there as well, you should have a pretty good idea about now whenever or not you should be going ahead to do this trade. What are your main arguments? Why are you doing it? Have you checked the fundamentals? What are the future fundamentals? Have you checked the technicals? Have you checked the technical indicators? How much risk are you involved? How much margin are you using? And are you feeling quite confident? If the answer is yes, you should certainly go ahead and do the trade. If you've got lingering doubts or questions, perhaps still consider doing a trade, but bring your the size of your position down that little bit. Or of course, you can consider not doing the trade at all and look for the next opportunity. But this is just to give you a little bit of an idea of the kind of the checklist of questions that many investors out there go ahead and choose. If you guys decided to follow this at home, I think it would help you a lot with your future investing. I hope you enjoyed it, and thanks for listening.